Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report so exciting it might just put you to sleep, but don't worry, we'll keep it lively. Think of it as financial jazz complex, but with a beat you can almost dance to. We're looking at the North Shore Equity Rotation ETF Annual Shareholder Report. In simple terms, it's a fund that tries to beat the stock market by cleverly shifting money between different company sectors. Did they succeed? Did they fail? What does it all mean? Let's find out. If this sounds interesting and you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join the conversation. This report covers the period from April of last year to March of this year. It contains all the details of how the fund performed, what it invested in, and what it cost investors. Think of it like a school report card, but for your money. Let's talk money. For every $10,000 you invested, the fund cost you $91. You might be asking, is that good? That's expressed as an expense ratio of 0.90%. It's basically what the fund charges for running the show. To put it into perspective, if you had $100,000 invested, you'd pay $900,000 invested. 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 You'd pay $900,000 a year in fees. Is it too much? It depends. It depends on how it performs after fees, which we'll cover next. Time for the big question. How did the fund do? For the past year, it returned 340%. Not bad, right? However, the S&P 500 index, which is what they were trying to outperform, returned 825% during the same period, meaning the fund underperformed. This can be due to a number of things, including their investment choices, sector picks, etc. The report says the fund's choices in smaller companies versus bigger companies didn't work out as expected. Also, they had less money in consumer staple companies while this worked out to their disadvantage. The fund also invested in energy companies geared towards artificial intelligence. The advisor is strongly convinced of future utility demand. The report also states the advisor option strategy helped lessen losers, which is great. The report mentions some of the specific winners and losers in the fund's portfolio. Microsoft, for example, lagged, meaning it didn't perform as well as expected. The fund also struggled with Meritage Home, and Kamos did well, so the financials did well, so the financials did well, so the financials did well, so the Financial Select Sector SPDR fund helped the fund's performance, and Nvidia, a big player in the AI world, also contributed positively along with Apple. This part shows you how $10,000 invested in the fund since April of last year would have grown over time. Keep in mind, past performance doesn't guarantee future results. It basically shows that $10,000 grew to $10,828, while the S&P grew to $10,028. This is an overview of average annual total returns and is another way of viewing performance. This table shows the fund's performance over the last 3 months, 6 months, and since it began, compared to the S&P 500. This section provides some key stats about the fund. As of the end of March, the fund had about $41.8 million in assets. It held 40 different investments. The advisor, or the people managing the fund, were paid $114,189. Canned portfolio turnover was 71.05%. Basically means that the fund changes around its investments. In this case, it exchanged over 70% of holdings. This can have cost implications for the fund. Let's see where the fund's money was invested, broken down by sector. The biggest chunk, about 23.5%, was in technology, followed by financials at 21.4% and healthcare at 11.6%. It's important to know what sectors the fund favors, as it tells you about their investment strategy. Here are the top 10 individual investments held by the fund. Financial Select Sector SPDR fund is at the top, representing 10.9% of the fund's assets. Healthcare Select Sector SPDR fund, then they have a selection of high-profile companies. This section is important for tax purposes. It tells you the distribution that was paid and points out to consult with your Form 1099 and a tax advisor to know your tax obligations. The exhibit list contains exhibits. Here are a few important points. There's a code of ethics, essentially a set of rules for the people running the fund to make sure they're acting in everyone's best interest. There are certifications from the top executives saying that the information in the report is accurate and that the fund has proper controls in place. Alright, that's our quick rundown of the North Shore Equity Rotation ET annual report. The fund underperformed compared to the S&P 500 due to a number of factors as well as individual holdings. Now, looking at these results more broadly, North Shore Equity Rotation ETF has an alright investment strategy, with a diversified range of holdings, but its inability to outperform the S&P is of a bit of a concern, especially with the rather high fees associated 0.9%. With the right choices, it can do so in the future. Alright, that's our breakdown of North Shore Equity Rotation ETF annual report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.